China's stock market has already collapsed to a 7-month low as the country's government steps up its crackdown on tech companies. Beijing aims to provide stricter regulation of its high-tech sector. At the same time, currencies continue to trade in the previous ranges in anticipation of the Federal Reserve's meeting. Market participants are hoping to receive some clues about the future of the monetary policy in the United States. At the same time, investors are trying to assess the prospects for a change in the European Central Bank's rhetoric. To be more precise, the difference between the policy strategies of the Fed and the ECB is slowly becoming apparent in the market. The regulator of European Union nations still adheres to a dovish tone and, in anticipation of the next wave of the crisis, intends to keep interest rates at zero until 2023, when inflation is anticipated to return to the 2% level. Britain's financial regulator has a completely different position. According to statements by officials, the Bank of England is quite ready to withdraw some of the current monetary stimulus against the backdrop of accelerated inflation. Notably, British consumer price inflation jumped to a 3-year high in May. Moreover, there are signs that inflation will continue rising. Today, the Confederation of British Industry said its monthly retail sales volume continued to rise at a fairly rapid pace in July, slightly retreating from a 3-year high posted in the previous reporting period. Looking ahead, sales are expected to grow further at a steady pace in August. This means that the Bank of England is forced to take measures to contain inflationary pressures. Yesterday, the euro-dollar pair managed to gain upside momentum. However, its bullish run was limited by the range of 1.1750 and 1.1830 formed early in the market. According to the trading chart, it can be seen that the quote has been moving sideways for more than 150 hours, receiving intense attention from speculators. In this situation, the best way to make a profit is to use a breakout strategy, which will help market participants define the market's further direction. After drifting within 30 hours near the level of 1.3800, the pound-dollar finally managed to resume its upward movement. However, in the European session, the price pulled back and returned to its previous levels. For now, the 1.3850 mark acts as a resistance and 1.3750 as a variable pivot point. And that's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.